Hello, Introduction to Managerial Accounting. This course is basically focused on an aspect of accounting. So you should understand accounting as a broad discipline where you have financial accounting, managerial accounting, auditing, taxation, and many aspects. So the managerial accounting tends to focus more on internal use of the information. So this is particularly important because the businesses tends to use this information in decision making. Now let's go ahead. So a managerial accounting, generally you'll be looking at the use of accounting information system or as information data for decision support for managerial or for leadership. So leadership or management generally will include things like directing, controlling, and these are part of the organizational activities that they have to do in order to be able to create value for their customers. And one fundamental part of it is to be able to rely on analysis and critical review of information that they have in order to support a decision that they have to make or pass information to the operational division that has to make certain decisions in terms of the operation of the business. So one key thing that the management accounting focus on is very much futuristic, which means it is introspective, looking at what will happen in the future rather than retrospective. So you might be thinking about how is this different from other aspects of accounting like financial accounting. It is different in many ways because the emphasis of management accounting is very much type of accounting that is used internally and is still not regulated or controlled or like what you have in financial accounting where you have to comply with certain accounting standards. So when you engage in management accounting, you basically carry out a kind of accounting activities that is based on the relevant, the timeliness, and also the forward-looking type of information that can be used to make certain decisions, such as buy a product or sell a product or to stop producing a product. Those kind of various decisions are not arbitrarily. They are based on calculated accounting values and sometimes analytics. So the other aspect you need to understand about the management accounting is not only based on numbers, it also covers things like what we call the balance scorecard, looking at the non-financial information. So we'll be looking at that context as we progress in the course. The key aspect of management accounting, you look at the planning, the controlling, the budgeting, the various analytics, and the performance. These are the core concepts or the core parts of what a management accountant do. These days, we don't really have much emphasis about management accountant or financial accountant. We tend to be having things like corporate accountant, general accountant. That is because over time, the responsibility has been consolidated where an accountant could do many of these aspects of accounting. In the past, we used to have people who specialize in management accounting, and all they do is basically carrying out analysis and kind of insight support for managers to be able to make decisions. One core part that you'll be studying in management accounting is what we call the cost behavior. So costs behave differently. Some costs is considered to vary in their behavior, while some costs are considered to be fixed. So certain costs, for example, as you use some resources, and as that resources you use increases, the cost also increase proportionally. An example of that would be raw materials. So all of you are familiar with that. So if you are cooking soup in your house, for example, the more ingredients you use, the more resources you use, in terms of materials you use, the higher the cost. The less you use, the lower the cost. So as you continue to introduce more ingredients to your cooking, more cost is being cut in that way. But there's also part of your cooking that is fixed. So for example, if you rent a house and you have part of it that is a portion to be your kitchen, and then you know the amount that is related to that kitchen, that rent you pay is fixed, irrespective of the volume. So as you continue to produce your products, even though the volume increases, the rent remains the same within the relevant range. Okay, as you increase your capacity or you produce more, you might realize that the space you currently use is no longer sufficient. So understanding that cost behavior, it is important because that helps management to control cost. That is very important. So when you understand cost behavior, you know how to control cost. And that is why some businesses will not hire someone on salaries. They will rather hire someone on wages, which means they only pay those individuals based on the hours that they actually work, rather than them paying them for the entire day, given that that cost varies because the longer they stay in the workspace, then the more they, perhaps the higher the pay. So they can control that cost by making sure that the labor actually arrives as at the time they are required to work, and then they leave as at the time they finish working. So comparing that to salary, it will be different, which means irrespective of whether they work or not, in some salary cases, you still have to pay them. So understanding cost behavior is a strategic case that will help to achieve strategic position. Then the other thing you need to consider is what we call decision making, such as pricing. What we call, for example, we say, how do we want to determine our price? Do we use price misprice, or do we use a different type of pricing method? Do we outsource our production, or do we produce in-house? So this again is a decision that many businesses face that can only be made based on some insight and calculations, given all the variables that are involved in that particular situation. So management accountants are responsible for helping to look at these situations and then make recommendations on the best and the worst case scenario. Now, if you compare the management accounting and the financial accounting, these are two different things. The financial accounting tends to focus more on the retrospective, what has happened, historical, things that are already passed, and then you basically report that to the stakeholders. And it is guided by accounting standards, unlike the managerial accounting, which is more futuristic, which is information that is used to support decisions that is made today that affect the future, more introspective in terms of how it affects the outcome of the decision that is being made. Now, there are some provocative questions you should have in mind when you look at the management accounting. One is, which is more powerful in terms of the financial accounting, which is truth, because it's basically reporting what has already happened, or managerial accounting, which is useful, which is based on decision that will happen in the future. So again, these two accounting aspects, there is no one that is more valuable than the other. Both are valuable. Now, it now depends on the angle that you evaluate the situation from. If you're looking at managerial accounting from the management perspective, the managerial accounting will be more useful to them. If you're looking at financial accounting from stakeholder perspective, which include the investors and the government regulatory organization, then the financial accounting is very powerful. So we use the word truth in the case of financial accounting in the sense that it basically reports what has happened and nothing more. The managerial accounting is basically trying to see what could be possible in terms of the competing alternatives that businesses face. Then the other provocative question that you might want to consider is, should managerial information be accurate or just useful? It depends on how you define accuracy. So again, there's what we call cost-benefit analysis. You should look at the benefit you try to achieve from the analysis you are conducting, given the cost that you incurred to be able to carry out that analysis. So usefulness in this case is more important. Accuracy to some certain level is definitely required. Why prioritize financial reports if managerial accounting drives decision? Well, managerial financial report is basically required for certain businesses that have what we call public accountability. And these are mainly a large organization or listed companies. Without their financial statements, the stakeholders or the investors can be misled. And beyond the investors, you and I also use that information in our learning. So we want information that is reliable, useful, and basically give us some insight about what happens in the past beyond the regulatory requirements as well. So let us also think about decision like drop a product or make a product. What is the danger when we drop a product? Oftentimes, the fact the product is making losses does not mean that we should drop the product. You have to look at the cost that is involved in that. So if you drop certain product, for example, you have fixed cost that is not avoidable. That fixed cost that is not avoidable, it could be that the revenue currently coming from the product is actually covering part of that fixed cost. So by dropping the product, you might be incurring more cost. So that's why sometimes your manager might say, well, this product is making loss, but we have to continue to produce this product. So again, these are some provocative questions that comes to managerial accounting space. And then we also look at the budget, motivational or restrictions. So again, we have some budgets that will be designed to provide incentive, motivation for management to meet certain goals, and also to align the manager goals and decision-making to that of the organization. And that is what we call the goal congruence. Of course, you're going to learn that as you progress in the course. Now, you can also think about how does the managerial accounting help large organizations such as Amazon, Apple, Tesla, all of these companies. So basically, they apply managerial accounting in terms of cost control. They apply managerial accounting in terms of making analysis about their products they produce, looking at the strategic value or positioning of the organization, the nucleus or the foundation of their decision is based on the managerial accounting analysis. And they could see what is going to cost them in terms of raw material wise, what is going to cost them in terms of the overhead costs, and many other type of costs involved in the process. Now, the other thing you have to look at is ethics and strategy. So should manager withhold internal insights? It depends. We have what we call the ethical code of conduct for public accountants, especially CPA. So basically, you look at competency, integrity, credibility, and confidentiality. All of these are ethical conducts that an accountant should have and should be prioritized in terms of the kind of information you share with people. So managers sometimes could also classify some information to be confidential, and some information could also be shared with the stakeholders where needed. Stakeholders in this sense will be the staff or the internal staff where needed. The managerial accounting could also be used to look at profitability, whether short-term profit or sustainability of managerial accounting. Also, basically, long-term plan is part of the thing that managerial accounting tends to focus on, but there are times in which the management accounting could look at the short-term decision-making. So both aspects of decision-making, whether sustained decision-making or short-term decision-making, will depend on what the organization wants to achieve. Most times when management accounting carry out analysis, it's not arbitrarily. It's because there is a situation that occurs, and then you have a set of questions that need to be answered. And to answer those questions, it's not arbitrarily also. It has to be based on rationale and facts. And that is where your responsibility comes from when you start looking at different business decision-making alternatives. So as I mentioned earlier, this is a very broad aspect of the course. We are going to be narrowing on specific area as the course progresses.